Here we are with Model Book. We're going to be understanding and unpacking one of the best performers on the ASX from a momentum perspective. It's Catapult. It's had a phenomenal run, a huge performance, and presented many momentum opportunities for us to trade. Gary Glover's going to go through that chart, unpack it, identify exactly the entries, the setups, the indicators, and the volume analysis, which is what we really love to do. And that's what the best traders do. They look at the best performers on any market and use that as their homework to hone their skills to become better momentum traders. So that's what we're doing here. Good afternoon, Gary. How are you?
I'm good, Chris.
I noticed that Catapult is one that we looked at almost 12 months ago, and you put it forward in a short list for us to send out to members who got to vote on which one they wanted to see you update again, or just unpack of all those selections you put forward. And Catapult was voted through. So why has it made the list twice within 12 months?
Don't know, you're blaming me, are you? I guess it comes down to the fact that it's one of the strongest stocks on the board. So being a popular stock, being a well understood stock, because obviously Australians by nature love their sport. But I think it's been visibly one of the strongest sort of stocks there, kind of like 360 and Catapult. But they're the sort of two that come to mind. I mean, Pro Medicus, sort of maybe less so Hub and Net Wealth. They haven't had probably the same type of moves there, but there's a few other ones there which we've covered recently, like the MTM and but Catapult's just been a business that's just sort of it's one that's been around for a while. It actually was a bit of a laggard for a while, so it's quite interesting that it, so I mean, sometimes these sort of star stocks, they can take a little while to get some traction and get going, and they can have a few early years there of sort of maybe spending too much money, not making enough money. So, there is a turning window there. We've seen it with Xero, 360, probably the two that I think come to mind there. But so it does sort of give us hope that maybe there's some other stocks there that we're looking at the moment, thinking there's a good businesses that are sort of growing, but they're not. They're probably cost and not revenue heavy. Also, maybe they're revenue heavy but not making any money. So, but maybe there's a catalyst around the corner there where they go from these strong revenues into start making some profit there, and then the whole thing turns around. So that's probably, I'm guessing that's it. I'm like, maybe you can tell us more.
Well, I know you went into it in great detail, and we unpacked sort of the pre-2025. So we'll put a link in that if anyone wants to look at the previous setups. But I think you kind of summarized it really well. In the last 12 months, they did acquisitions, so they had revenue growth in that sense. They had some good success with US technologies. I think it was Perch. That was January 25. March, they then reaffirmed their guidance for full year. May, they announced it and came in a bit with more revenue. So these are all positive news markers. So any momentum traders following probably have a checklist of the fundamentals that you've talked about many times. And these will all be sounding familiar. Capital raisings, adding to new lists. But one request that we've received a lot is actually, how do these companies work on the launchpad? And that's what I might just share now, because that's a common question that we get. And this is probably the perfect example to use it. So on screen, hopefully Gary can confirm when it shows up that he can then see a nice, pretty colorful 2 sets of charts. Are they showing up on screen for you, Gary?
Yeah, they are now. Yeah.
So this is Catapult over sort of the calendar year of 2025. So 9-10 months kind of thing. We can see the yellow. I've done the yellow highlight. That's kind of the March lows, April lows in the market. And the bottom line, this blue line, think of that as launchpad. And the top line is momentum score, the purple line. So throughout the market doldrums, when the market was coming into lows, Catapult, like everything else, had very low momentum scores, as we'd expect. The question is then, how do we identify the next leader? And as you pointed out, they were a bit of a laggard. So how do we find them? Well, we started seeing a lot of explosive movements between the launchpad, going up and down these blue lines, which is that yellow period. And then these blue diamonds show when they came up in the top 30 launchpad. So that's when they came into the list, and then Gary's doing the reports on Fridays, going through that list. And this is the red circle. So that's when we get our first marker. We'll have a look at that because that red circle actually coincides with Gary's marked up chart right here. So Gary's going to talk about that in detail. But this is the yellow period where the market's falling. That the same as the chart we saw before. And then the red is when it showed up in the launch pad. So that's exactly what we're looking for in the launch pad. This green period is when it's shooting the lights out. Well, that's when the momentum score's at its highest. It's really, really high. So this purple line is very high. And that's all these orange crosses. This is when it's in that top 30 list. For those who are looking at the daily podcasts, the daily tweets with the top 10 momentum companies, or the members who have access to that list even earlier, they're seeing Catapult in this list day after day after day after day with these orange X's. So that's market leadership. And then the part that we're going to be asking Gary about, I guess, and he'll be explaining, is these purple sections. This is where Catapult, or the pink bit, came back up into the launch pad again and started increasing with momentum. If we look at that, that's this period here. So Gary will hopefully explain to us how to trade that, if at all possible. But that's how we use the launch pad and the momentum to identify these opportunities earlier. We want to be capturing this part of the trend, and Gary will help us with the B-Wave breakout. But this B-Wave is happening at exactly the time it's showing up on the launch pad. So we're using that launch pad list to filter it down. And then Gary will explain how he uses, once he's got the list, to trade it. So that hopefully explains and connects the two together. That's what members have access to. And I'll stop the share so then Gary can take on over and move into the charts. And as he's loading that up, there are fundamental overlays that obviously he'll work through. And if he's seeing earnings price, the whole CEPA methodology that Mark Minervini follows, that does really help. But we have a lot of small cap companies on the ASX, so it doesn't always work with the market leaders that we see. So we're looking at a weekly chart here, are we, Gary? Catapult, going all the way back to 2017. It's come off.
Yeah, we are. Yeah. Yeah, it's pretty interesting. We sort of forget, it's easy. Our brains sort of don't remember it now, this was 60.5 cents in 2023. So we forget sort of where sort of stocks come from and what these sort of leaders can go through as well. So Stores obviously did have a bit of an early pop there, which is sort of something which, we often do see some amongst those leaders. I think 360 might have been the same there, had that early heat and then a bit of a fade there. I think Nuix had something similar, had a bit of a small pop and then faded for quite a while. Even TUA as well, something like that as well. So some of those sort of big movers there, they can have that early heat and then fade. But we see this thing's faded here and, had the 19 low, had a bit of bounce, come back, and 20, that's the COVID low. And then 2023, it's actually came back and retested that 2019 low there. So that's really come back to that 60.5 cents there. So
we're talking about ranges 60.5 and $2.50 within the matter of 2 years.
Yeah.
Down, up, down, up, down.
The big moves. Yeah. That's sort of really, this is sort of the point where it sort of starts to sort of build here. And it probably comes on our radar because you've got to remember there also October 22 was the low. And then also March 23 and then October 23 was a high low as well. So this actually was probably showing a bit of weakness, not showing relative strength in that phase as well. So even coming out of this March low, the market was making a higher low in March, and this was making a new low. So it's still not showing any relative strength at that stage. So that's what I mean. There's some great companies out there, but you've got to wait for them. You got to show that relative strength there, Chris. So we've got to start to move in the right direction there. Sort of like sometimes we look at companies and go, it's a really good company, it's a really good product. I could see, they got a growth profile there, but they can go through a year or two or even a few more years of actually hardship before momentum. That's why the sort of the technicals are so important there because, we want to be coming into those things when they're, when there's some momentum there, so that was.
You've jumped ahead with that momentum, but before we progress into that, is it fair to give ourselves as momentum traders, give ourselves a break and forgive ourselves for not trading at the lows? It's showing relative underperformance. So not buying at the absolute lows. That's not what we're here for, right? We'll give ourselves slack on that. We're not trying to trade out part of the chart.
No, we really want to be basically waiting for a sign of strength there. So we want to basically sort of, maybe the stock holds up better than the market or it bounces out harder than the market or we see that sort of sign of strength and then some congestion. seeing 52-week highs. That's a sign of strength as well. So, so really, I mean, even sort of coming out there, the first time this does show any strength, I mean, that's sort of the low there in March 23, and it does have a bit of a rally here and a bit of volume there. But again, that has a fairly deep pullback. So you could argue maybe it stays in the top half, and maybe there's a small trigger in there, but yeah, it's still not the best sort of signal really. Does have another drive here. So now we're starting to see impulsive movements, and then this sort of does correct there. It ends up tightening up in here, and you do get a bit of a VCP in here, and then you get a bit of a B-Wave break. So these sort of rallies there are starting to show strength there, and they're obviously having a reasonable percentage move, because that's gone from 70 cents there to 108, and then we've gone from sort of mid 80s up to 120 there. So they're moving 30-40% move. So we are starting to show a bit of strength in terms of percentage moves there. But even that sort of pulls back there. And that's probably the first little trigger for me, is this sort of setup in there. And like, I think on one of the other charts here, you can sort of see how there was a VCP a little bit tighter in here, and then it does come through, break a little B-Wave break, and then it goes to a 52-week high later on as well. Okay. And then it does sort of comes back and undercuts the high, which we do sort of see those undercuts in the top half there, but stays nice and tight there. So that's sort of one thing we often do see from some of those stronger names. Like we can see here that, there's sort of 3 52-week highs there, Chris, sort of breaking here in that November, and then later on in March, and then later on here in May as well. And this is one thing, the pros, they're not afraid to buy those 52-week highs. That sort of show of strength. It'd be nice to buy the B-Waves down here. So to buy the undercut, buy another B-Wave in here. But they're not afraid to add to those stocks when they're coming through to 52-week highs there. You can sort of see that strength. Obviously it's gone up and pulled back again. It's gone up, pulled back again. Maybe gone up and pull back again. But you do sort of see that, you can get a sharp, once you break those 52-week highs, you can get a pretty sharp burst there. So again, we're going from 120 to 140. So 20 cents, that's probably like a 15 to 18% move here. 140 up to 170. So again, you're probably getting a 20% move in here. And then you're going from 165 up to 195, so again, you're getting another 15-20% move again as well. So once you break those levels, you can get that burst, and then you get the retreats as well. So you can kind of see those. So just that same period there, I've just highlighted a few. There's the sort of, the undercut there, another VCP in here, little B-Wave break in there. We get another VCP. It's sitting up a little bit higher. It does sort of tend to sit on top of the high. That's the one thing you want to see with trend construction there. The one disappointing thing about the stock, Chris, is that there's no dominant moving average. So like Drone Shield, which has been a bit of a star here, has sort of hugged the 10 a lot of the time. Sometimes it's bounced off the 20 when it wasn't motoring, but it's had that really strong emphasis. It's off one of the moving average lines, whereas you can see here with Catapult, it's undercut the 50 quite a lot. So, I mean, you might be able to argue that maybe breaking the 50 and recovering is a good sign. Maybe that's a good entry level, but you're still cutting rather than holding it. So the moving averages don't really, not sort of something to hang your hat on there. So that's probably a little bit disappointing in some regards, but we often sort of see those sort of stocks that just keep chugging along. What's more important is the high, low, high, low, high, low, is that we just keep building, so using the last low, can often be more important there. So we sort of see this, does sort of break here to 52-week highs in there. And then I think this is sort of 2024 when, this is sort of when we hit the radar there. And with the one thing we sort of showed there, we showed all these, there was really like a lot of bull flags in that period there. Let me just see if I've got it marked up a little bit better. Sort of see there's VCPs and bull flags all marked all the way up here. And this was sort of when we covered it last time. So it had a pretty good run at that stage, but what you didn't sort of see there was much selling. See how it's basically sort of just keeps, it's running impulsively and then going sideways on a, correction, impulsive and then corrective, impulsive, corrective, impulsive, corrective. So
it's not getting washed out. It's not having a massive pullback. It's quite conservative.
Yeah, that's right there. And then look at that. There's where it sort of, there's another 52-week high in here. But look at the volume coming there. I don't know if I can sort of show that day here. Yeah. So I mean, we're basically sort of coming through there in November. Yeah. So look at that. We're basically breaking out here on pretty big volume.
So that's like 4 times the previous record highs and at least 10 times the average volume for the days.
Yeah, so it probably ends up being an EP, really. That's obviously a catalyst on news there on the 14th of November. So, I mean, the stock's been running, sort of not, but all corrective, orientation on the way down here, just continually sort of higher lows there. And look, breaking the 50, holds a 50 here, but no dominant moving average there. But just, the one thing you see is high, low, high, low, high, low, high, low. It doesn't break a swing low here. It just keeps building here. And it's got that corrective price action as well. So you can see the volume's a little light through here. You see the volume spikes on the way up. But then if you look through the depth there, you'll see that on these pullback there, you just see no volume, even through here as well. Look at that. That's, it's looking a little edgy there, but there's no selling in there as well.
So that's telling us there's strong hands. The people who are holding it are holding it for a longer term. They're not just short-term trade. Yep. They've got belief.
That's right. So you're just not sort of seeing any sort of signs of distribution as well. So, when we're trying to ride these bigger trends and moves and stuff there, you just got to be wary of sort of seeing that extra volatility and maybe the extra sort of selling and stuff there. If you see sort of back to back, you can sort of have that. I talk about this all the time. You can have that one day of selling, but then if the selling doesn't follow through, then you're not sort of seeing that. That's So I think you'll often sort of see that one day of selling and then no sell. So it's just like maybe like an insider just decides to do a little bit of selling here in one day and that's it. And then it pretty much dries up and there's no selling, no follow through the next few days. That's always a good sign there. So, that was a nice move there. It's sort of coming out of that November move there. And you guess you got a few things going on there. You've got that, going to a 52-week high there, but you've also got a breaking out on pretty good volume as well. So, that's pretty. I mean, it's pretty impressive sort of trend overall. If you think about
that, that gets us into sort of that fourth wave that you've got highlighted there to the top right. It's had a stellar run. It's a huge gain. Could arguably be a high type flag with over 100% rally and then congestion right up in the top. But then we're moving into 2025, which is there's still a bulk of analysis in there as well and a bit of a movement. So how does that coincide? Maybe you've got more charts before this, but with the lows that we saw.
Yeah. So, I mean, after it has that powerful, I guess you might call it episodic pivot there and has a pretty strong drive. I mean, that's sort of going from the mid, that's probably at 270 all the way up to, sort of 370. So it's a pretty big percentage move in a pretty short period of time. And that does hold the moving averages there. And then it sort of does start to roll off there. And it goes through that sort of kind of squaring off there as well. The one thing I do look for now is those stronger names to sort of have that A, B, C, have the undercut of the low and then recover there. And then, so whether you sort of try and buy the little false break in here, you wait for the little B-Wave break and then come in again. But so you might get a nice little trade in here. So, I mean, you can see here that there are plenty of triggers there, but you see that it tends to run for a bit, but then it has a pullback, and there's some pretty decent pullbacks in here as well. And these are all coming back into the range. So this is the thing: the pros will sell some into heat, and then backstop the rest, and then maybe trail with a moving average. So if they do run like this, if they sort of suddenly go from 270 to 370, then they're able to get on, maybe to sell some in the heat in the first few days and then ride the rest with a moving average, and then they get crossed out here. So maybe they get out at 365 or something like that. So still a sort of dollar on a 260 move, which is probably, 75%. So maybe you sold half at 20% and sold the rest at 75. So you might net out a 50% winner. So a lot of people think we don't have big winners in Australia here, but there's plenty of them around. It's just whether we can get on and have a mechanism to, to get the trade on and also to sort of stay with it there. But you'll see here that if a few of these trades here, another little B-Wave break in here, probably
that going Ross there. That one,
yeah.
Actually, no, I'm jumping the gun. It's the next B-Wave that showed up on the launch pad that we highlighted. Yeah, so that B-Wave there, is that tradable in your sense?
Yeah, that's definitely tradable. That's had like a bit of a pause. That's had like an ABC, and this could be a breather, and it could just go up here. So, again, we, maybe 1, 2, 3 days is sort of what the pros will sell some into strength, and they'll backstop the rest, and usually using moving average. So this, you can see here, this previously ran the 10 before it broke. So, okay, you might be using the 10 here again, and then it breaks through again. So again, you've sold some after 2 or 3 days, and then you backstop the rest a little bit here. So you don't end up with a big winner, but you end up with a mild winner there rather than a big winner. But then it goes through a corrective phase, and you're just watching it again until it sort of, comes out. This has a larger correction there, probably overbalances a bit, sort of expands here and then expands below this low here. So probably the first time it's showing a bit extra weakness, so probably might have you a little bit more guarded. But it does sort of, jump up here, tighten up, and then come through. And again, you're breaking up again. So
just when you're guarded on that coincides with the market lows, right? So at that time, we're seeing pretty much everything wash out, aren't we?
Yeah, that's right. So so we basically had a pretty sharp pullback into April the 7th. 25. So, maybe this has held up better than the overall market, because that was a pretty aggressive sell-off. That was a 45-day sell-off from the high, which exactly the same as we saw in 65 when
1965.
Yeah. So we had Trump enact these tariffs sort of 60 years after Johnson enacted similar
tariffs.
Yeah, slightly less aggressive tariffs than Trump. But had the same effect, really. Had a 45-day sell-off in the market there. But yeah, maybe this has held up better than the overall market, but it does sort of come out here and then break above here. So,
and that one there is the one that coincides with Catapult showing up on the launch pad, right in that period where you've highlighted B-Wave and you're talking about it. So
I guess the negative there, Chris, is that that's the 50-day moving average as well, which
I was about to ask you.
Yeah. So we do prefer to see it above there, but we did see plenty of what I call 0, 1, 2, 3 patterns coming out of the April low, where we see, like, on the dailies, we're seeing, 2, 3, 4 high lows, in quick, in very fast time. But yeah, you're really looking for that show of strength. So even if you waited for, maybe the break above the 50, that probably wouldn't have been too late here, but hard for your stop, as well. That's the key. There's, you're trying to get a trade on there with some sort of lower risk element to it. So that's why I like to sort of see it, run up, congest there, and then break through a little bit of a high as well. And then sort of try and use that as your sort of stop as well, because it really shouldn't break below that last sort of congestion. So at least that's sort of giving you, something around that sort of 5% mark, which is sort of, I know Menavini will sort of, that's his sweet spot for stocks there, but I know O'Neill will have like a, maybe a 7 or 8% stock as well on some of the leading names. So, each to their own. But again, and this is weird because obviously this Catapult has, it's crossed the 50 a few times, but then it's hugged the 10 here. And then on this run here, it tends to hug the 20. So it's switching between the moving averages each time here. So there's no one predominant there, but that's, again, this is the thing about these momentum stocks is the key is to sort of get a good entry on, low risk. You get that spurt, you sell some, and then you ride the rest. Whether you're using some using the 10, some using the 20. So, you need a mechanism to sort of try and capture some of that, big move here. So like at the moment, I've got 2 trades on where, because I'm in the amber period of the market, I'm not getting up to full scale. I'm only sort of getting sort of half or 2/3 sort of size on. But I'm selling half into 2.5 to 2.75 times my risk. And then I'm moving the balance up to break even. So I've got 2 trades on at the moment, which I've sort of taken off half at 2.5 to 2.75 times my risk. And then now I've got those stocks at break even. My stop, that is. So I've got nothing to lose. I've already banked a little bit of profit, and hopefully they run, and we just don't know how far they run. And I'll be dictated by the moving averages, and and that's all the pros try and do. So so we saw that. That's the mid through 25. They had a pretty explosive move there. I mean, it did cross the 10 through here, but it's held the 20 the whole time here. And I guess most important thing is if you do drill into that, so that's sort of at May 25 there, you'll sort of see here that if we look even at those sort of few down days, in here. So we had 1 down day, 2 down days, 3 days in there. So there's just no selling there, Chris. So even though this has gone up a pretty nice run here, that's a pretty small bar. The next bar, first day down, that's a small bar as well. It's not even the next day as well. Next day, there's just no selling going on. So even though it's sort of popped up here and then gave us what, that this might be, people might be reacting to that little hanging man, but this is like a 5th wave, they learn a little bit of Elliott wave. I think 5th wave here. We just don't know with momentum sort of stocks how far they can run, so they can just sort of keep powering. So this is what.
Let's ask you on the volume you've got highlighted in November. That's massive volume, and then it seems to sort of continue and stay slightly higher.
Yeah.
What you've got highlighted here throughout April and then May, the volume looks a lot lower, and that's coinciding with the market rallying. I know from talking to you throughout that period, it was a very good period for you trading wise. There was abundance of opportunities. So you're talking about low volume in the pullbacks throughout the second half of April and May that you were just highlighting before. Are you concerned that when it's rallying, it doesn't seem to have as much volume as it's shown, into the decline of March and April, but also in the rally that it had in November? The volume seems to be lower. I get that the share price has doubled, so same dollar value might be going through. How concerned are you?
Yeah, there's definitely something to consider. If you go back and look at BHP and Rio in 07, that last leg up, that was a low volume rally, but the last leg up can be pretty high. It's funny, I'm seeing a lot of golds. I mean, gold's obviously on fire at the moment, had a pretty strong run, but there are some low volume rallies going on in gold at the moment. But that can be the end, but you can still move through. I mean, that's if you're moving through quite nicely there without having to push the volume, it's just telling you there's not selling ahead. And that's the thing about, this is one thing which you constantly battle as a new trader, is that you're looking at charts and you're seeing stocks that are beaten up and you think, oh, it can go back to this high. But the thing you forget is there's, if the stock's been to $4 and that's now it's at $1, there's so many people who've paid between $1 and $4 are in a losing position that are losing right now and are just looking to try and sell and minimize that loss. So it's just sellers ahead here. So, but when you're at new highs, no one's at a loss here. Everyone's a winner. So there's not the same sort of mechanism. And this sounds funny. That is a really misunderstood paradigm of the market. Is that, when you're at new highs and all-time highs, there's no losers there. So there's not.
You're all winning together. Everyone who's invested.
All winning together. There's no rush to get out of the door. Whereas, you've bought at $4 and you're down $3, you're thinking, if I just get back to $2, half my money, half my loss, I'll get out. Okay. The bloke is at $2.50, I can just half my loss at, $1.25, I'll get out. The bloke is at $4. If I can just get back, 1/3 of my loss, back to,
So you and I have traded that with retail traders. We've had a lot of retail clients, and we understand the psychology that no, I just want to get back to here, and then you end up with a flood of trades, and it's actually got momentum now. You actually want to hold it, but it's the average trader
makes it hard to penetrate those sort of levels. That's why you have that's why the 50-80 rule sort of exists there, because you sort of, these sort of momentum stocks can really power on, have big moves and power through to, so I can get to new highs. The market can just accelerate. In the past, I've sort of seen those new highs. I'm probably trying to sell and probably trying to short some, in the past as well. But you realize that you can lose your shirt trying to take on these sort of strongest, fastest names there. They really, it's like building a base. 0, 1, 2, 3. If you're going to sort of short anything, you probably want to start to see 3 or 4 lower highs. If you follow Gil Morales and Chris Karcher, they do a bit of shorting, but they will often be looking for a series of lower highs and actually breaking lower lows as well before they even sort of short here. So they're not trying to pick any highs. They're seeing low highs, and it's a bit like
they're seeing weakness, right? They're seeing conviction. Like you're looking for signals of strength at the bottom. You're looking for signals of weakness at the top of what you short.
That's right. So the pros aren't going to sort of step in and sort of short these stocks at new highs there, because they know that the market's got momentum to really push on. So they're often buying that sort of strength. So, so it's pretty interesting there. That was a nice little undercut through there, little B-Wave break, and then it's coming through it, even though that's below the 50, which is not ideal. But
so that was when it was last on the launch pad, but I think you're going to scroll to the right, and this is where it was recently on the launch pad again.
Yeah. So we see it has another VCP, does break up there. I think at the time there we might have covered this, and I think I've sort of said to you, I did think this looked like a fifth wave, because that's a typical fourth wave congestion, and you go fifth wave. So I just didn't know how far this, once it broke out of here, we a bit of a trigger there. But I wasn't sort of sure how far this can move there. I think I traded, can't remember if I traded this or not, actually. I think I was looking to trade this, but I just didn't stay with it too long here. I think once it maybe broke here, I was out here. But then it's come back again and reset. So it's interesting there, because it's sort of, to me, you've gone back below the 50, which is a bit negative, but we know the stock's got a history of undercutting the 50. It has bounced back again pretty strongly. The volume was pretty solid on the way up here. The only trigger for me is breaking this little swing high. So that's a sign of strength there. So coming through that. So it's probably the first time you might come in here. But it's been pretty strong there. So I think that's kind of where we're at. We might be sort of slightly higher here. So
that gets us up to date with a market leader that's moved just in the last, these 6 months or so.
Yeah.
From under $3 to over $7.
Yeah, I think it's popped up to 760 in the last couple of days. I had a bit of a jump yesterday, so it's slightly higher here. So, but it just goes to show here, sort of, that's the thing about. I think the interesting thing that traders can look at, Chris, as well is, if you went through, say, the model book, those big trades there. So we've covered, a few just one stock ones like CAT and MTM. Then we've covered a few where we've covered 5 there, but just say you went through and looked at, say, 10 of those. If you've got a trading process and some trading rules, what would have those rules, like where would have had you in and where would have had you out? And just so you go through those 10. So don't just do it for one, because one's just not a good subset. But if you did it, say, a subset of 10 or 20 leading sort of stocks there, then that'll tell you sort of, where did I get in? If I follow the VCP or B-Wave or whatever rules you have, okay, I'll get me in. So if I got where would my stop be? Where would my risk be? What's my process? Do I trade something to hate or not? You might just be someone who uses a moving average. Most of the pro use a multiple of risk or use a few days and stuff. Like Kalamagi will sort of sell some into day 3, 4. Minervini might be using 2 times his risk. Paul Tudor Jones might be looking for a bit more. Everyone's slightly different, but they've all used somewhat similar principles in that they sell some into heat. they get a large position on low risk, they add to it on strength, they sell some into heat, and then they let the market knock them out of that position, and hopefully they run there. So kind of do that exercise with your method and see how your method goes over 10 trades.
And this is not just for new traders, because what you're talking about is all those great traders that you've just listed. They've all done this and they all continuously do it, right? They're all honing their skills and becoming better momentum traders. And that's the secret sauce, isn't it? That's what they're all doing, beginners to experts, aren't they?
Yeah. Yeah. One of the things for me is sort of like I sort of play around with my process and I tweaking it here and there, but then I thought, oh, what if I think we're looking at WA1. And then I sort of realized, okay, this, if I followed my process there, this sort of had me in a few times and I got, I managed to sort of sell some into heat. And I sort of worked out, even the times that it didn't follow through, I would have managed to still make it a little bit of money, even though I didn't have the big move. So I sold some in the strength. So what it did, it kept the register ticking away. But then when I got the big move, it allowed me to capture as well. So this is like, okay, this is why the pros do this. You know what I mean? So, because then you can kind of see, so if you've got a process there that you've been working on, see where that stands up in the face of the biggest winners. So go through get 10 or 20 of the biggest winners and go through and say, okay, I can only enter on these type of setups there, whether it's the, VCP or B-Wave or whatever it is. But yeah, just see whether your process holds up there and see whether you can capture some of those big moves or not. And when it's also important to see what it does when it doesn't work as well. So
that gives you confidence, right?
Yeah.
So when you're trading, that gives you confidence in your system because you've sort of taken it through good and bad markets and good and bad setups, doesn't it?
Yeah. Yeah, that's, if you sort of go through, if you were to going through, look at say 20 sort of leading stocks, because you sort of, the reality is you might see them all. If you're looking in, if you're looking in the launch pad and you're looking in the, quarterly momentum stuff, but you're sort of seeing the stronger names there. So you're not going to capture them all. So maybe you sort of get on half of them there. But if you did a set of 20 and then you sort of like a 10 of, you're able to say capture, get involved in say 10 of those out of the top 20, then does your process hold up? What was, it's just interesting now. It'll actually be really good for your psyche to sort of know that. And then if it doesn't work, then there's probably problems with your process and your rules there, as well. So it's just nice to know, like it's hard to get your head around what the professionals do and how they do it. And then, for me, it was like, the first thing was like, when I started reading about these momentum traders and having these massive returns, I just couldn't get my head around how the hell are these guys making these big
massive
returns. Yeah, it just doesn't make sense to me. Yeah. But they're all trading this, the strongest names. They're buying strength. They're selling some into strength. They're backstopping the rest, and they're letting the market run, and then giving them a chance to sort of, capture those big names and stuff there. So you've got to get a process that does all of that. Keeps your risk low. Gives you a chance. Yeah, it keeps, takes some profits there. Takes the, keep the account ticking over. Because the other thing too is if you get safe, just say it's whether it's 10% or 15 or 20%, whatever your maximum position sizes is, if you're selling some into heat, taking some off, that'll give you a coin to look for the next one. Do you know what I mean? So, because the reality is, if you do find the 20 leaders, you probably don't have the money to trade a whole 20. You probably only got enough money to trade 5 or 8, But if you can roll some out gains and then roll into the next one, then it's going through there. So, those are the key things there, really. So, just think about the principles and then think about, does my process hold up and kind of doesn't match? Because everyone's going to be slightly different. You've really got to it's going to match your personality too, Chris, as well. That's the thing. You can't just sort of follow someone else's method to the T. It's really got to be suited.
It won't work.
Yeah, no, it's got to be suited to you. So am I sort of someone who's like, to me, I don't mind losing. I have no problem with losing. I just hate big losses. I hate seeing, I don't
giving
You
it a
know,
lot back.
I'm happy. Well, I can get paper cut all day. You tie me down and just paper cut me every half an hour. I can tolerate that. But a big loss, oh mate, it just kills me. I think it mentally hits me, and then it takes a while for me to overcome it. I have no problem. Like I did something yesterday, and I stopped something out today. Just small loss. I just took it straight away. I just realized I was wrong. I got it wrong. But then you stay with your winners, and then that's the key there. So that's me. But other people might be like, oh, I don't want to be trading too much. I don't want to be in and out. I just want to give myself plenty of room, give myself plenty of stop. I want to be like O'Neill, give myself 7 or 8% sort of stops. I believe in those stocks. I want to give them every chance to succeed. That's me. That's my personality. I'll run that. So design it around that. So it's really got to it's got to suit your sort of style. So based on what's made you, not just what made you money, but what's made you happy as a trader as well. Yeah, cultural. Yeah, totally. So, yeah, I mean, look, I think I love the David Goggins. Sometimes you've got to get uncomfortable. I agree with that. Sometimes you got to do things which So to me, switching to momentum trading like 4 or 5 years ago, that was out of my comfort zone. So it was great to get uncomfortable and do something I haven't really done before. And then what's quite powerful is actually seeing some of those mechanisms kick in and work. And you go, oh, okay, that's how these guys are making this sort of money. And then just seeing when you get on a 15, 20% position size, and then it does move like 30, 40%, seeing how that moves the needle, that really, it's like, that's like a lot.
I understand this now.
Oh, yeah. Okay.
Yeah.
How do I catch more of these 30, 40, 50% moves? How do I get big positions on? How do I get on those? And how do I stay with it? And but it takes a while. It's taken me quite a few years there. I saw a great slide actually there. This week actually about how many years it took all the market wizards to be profitable. And I think 4 was the starting place.
Yeah. Okay.
4, 5, 6 years for them to get their straps going. So, we're all in there trading thinking, oh, I've got a year or two, it should be.
I should be there by now. I should be there. I should be killing it by now.
But the greatest traders on the planet, like it was like 4 years for the best ones to sort of start making money. Sometimes it was 5 or 6 years before they hit that sweet zone. So 4 to 6 years was the sweet spot for most of them to sort of kick in and really start to thrive there. So if you've been toiling away for about 3 years, and you're thinking maybe not, the pros, it's taken at least 4 generally to get in that. So don't lose heart here. Keep persevering. Just you may just be close, and it is the thing about trading too. It's a game of inches there. Just little tweaks. Little improvements can have such a big bearing on your P&L as well. That's the bizarre thing I've found here. You're actually not. You may not be that far away from having a really profitable, fantastic system there. You might be close. You just might need maybe 2 or 3 little tweaks there, just to make it slightly better. And those 3 little tweaks there, but may not seem like much, but that could be everything in a profitable trading system with a great edge.
I completely agree. I know there is one small tweak that I have in mind, and it was moving my profit target in bad markets from a minimum of 3R to 2.5, and my win ratio went through the roof, and the returns went through the roof for a bad market. I think it was second, and that changed everything for me in bad markets. So this is tolerable. This is good.
Yeah.
So those who are watching, they want to be getting better at trading. You've given us a whole list of things. I've read with Daryl Guppy, sort of echoing what you're talking about with the market's best traders. He was saying sort of 5 to 7 is pretty standard, and that was a book I think he wrote 20 odd years ago. So it's still consistent, but the next steps, well, if we want to go through that path, you're through this 4-year path. You're telling us you've traded for much longer, and momentum trading. Then the next step is, okay, go back through the model book, reassess it. And then if you want to be learning and tweaking along the way, then join as a member, get the list at the same time Gary does, mark up your charts, send through the requests, and we go through them on Fridays, and Gary will give you commentary live. So there's one thing to sort of trade in the safety of knowing that all these model book stocks are going to shoot the lights out. But the 30-30 list, well, that's a live list. And then mark up the charts exactly like Gary said and test the system out. So there we go. We've got another model book that we've put away, Gary, an update of Catapult for another 12 months, and it's shot the lights out, gave us more examples. And we say thank you very much for investing in the time and investing your time to help us become better traders.
Thank you. And make sure you do your homework, folks.